All year long, it's been piling into these AI stocks. That's the way that you outperform. Now you're saying you have to AI-proof it. So what's the first step? How do you AI-proof your portfolio?
Well, so one of the things that we're looking at is we're looking for stuff that has lower volatility, and so that's definitely been a key, but it's not just about the lower volatility stocks. We're looking for lower volatility stocks that also have improving earnings expectations because we're going into a slower period. So, you know, one of the stocks we're looking at, for example, is something that's going to be a little more defensive. It's a healthcare stock. It's Pfizer. So you look at Pfizer, they have a strong balance sheet. They've had, some stronger earnings. This has been a laggard on the whole, but it is a defensive name that can really stabilize a portfolio. So that's a stock that, is certainly one that is worth looking at.
All right. So when you're looking at stocks, how important are dividends also? We're seeing some volatility recently. Dividends do give you some assurance of some level of yield, maybe not the price action you're looking for in the stock.
Yeah, so I think dividends are important right now. I mean, the big challenge for stocks is because with interest rates where they are, it does make it more challenging to want to be, quite frankly, to find great dividend-paying stocks. But that is certainly part of the equation for looking for what you're looking for. But quite frankly, we're also looking for stuff where earnings are continuing, where demand is still there. So like one of the other names that we were looking at was Hilton. Hilton is one of those where you actually see corporate spending, particular in international spending. That is actually, we're starting to see, revenues starting to increase, in a way that really, really benefits. They had a big beat in Q1, and we think that can continue, or at least at the very least stay defensive, because corporate spending is actually still holding up despite the economic headwinds. So it's kind of another more defensive name that we were looking at.
One other name on your list is waste management. I think this one's really interesting. I've heard people call it a nearshoring trend because as we build more things here in the U.S. and even over in Mexico, the waste and the things that we tear down have to be moved somewhere. Also, it's in your mind, you're saying it's a AI-proof trade, but why this one in particular? Just curious.
Well, so, Waste Management has actually spent quite a bit of money in their own technology. And so even though there's definitely some tech spend that really is going to improve the profitability of this company, and we think that we could see actually profits really have some significant improvement as a result of that. But even if we see a downturn in the economy, it's actually still a pretty defensive name. And so that nearshoring theme is definitely a part of that play. But it's also just they have a really strong balance sheet. So that's another one of the sort of aspects of what we're looking for to kind of, AI-proof your portfolio.